Jamaica is in one of the most difficult financial moments it has faced in years, and everything started after Hurricane Melissa. The storm hit the island hard, and the damages were far worse than what many expected. Jamaica has strong disaster risk systems, and the country did receive some money right away, but when you look at the size of the destruction, it is clear that the payout is nowhere near enough to fix the problems. That is why people are now asking a simple question: will Jamaica end up going back to the IMF? Even though the government has not confirmed anything, there is still no sign that the government reached out to the IMF, and the IMF itself said it has not received any request. But the gap between what Jamaica needs and what Jamaica has is so wide that the question keeps coming up. This script will walk through the numbers in the simplest way so anyone can understand what is going on and why the talk about the IMF is even happening. After the hurricane, Jamaica received a payout of $150 million from the World Bank catastrophe bond. This was triggered because the storm passed all the thresholds built into the bond. Jamaica also received $70.8 million from CCRIF. When you put those two together, Jamaica has around $220 million in fast funds. These payouts are for quick support. They were designed to help the country move right away to open roads, clear debris, support citizens, and get basic services back. These payouts are not for full rebuilding. They only help early recovery. The next part is where the trouble starts. The total damage from Hurricane Melissa is now estimated between $5 billion and $9 billion. Even the low end is huge. Even with the most generous numbers, insurance only covers a small part of the loss. Jamaica has a protection gap, meaning most of the damage is not insured. That means most of the cost must be paid by the government, private citizens, businesses, or borrowed from somewhere else. When you put $220 million beside more than $5 billion in damage, the gap is clear. Jamaica has a shortfall of several billions of dollars. The Prime Minister has said many times that Jamaica planned ahead. The country built a disaster risk strategy with reserves, insurance, and other backup tools. These planning tools worked. They helped with quick money. They helped avoid panic. They helped build confidence. But nothing in these systems was built for a near $10 billion disaster. No country the size of Jamaica can handle something that large without outside help. That is why the loan conversation has already started. The government said it will likely need to borrow for rebuilding. This is not because the country failed. It is because the disaster is too big. At the same time, the IMF has come forward and said Jamaica has enough buffers to manage the first short period after the storm. This means the country had savings and risk tools that allowed it to move early and respond fast. But the IMF also said they are ready to help if Jamaica needs support later. This is where the discussion gets interesting. Going to the IMF is not confirmed. The government has not reached out. But Jamaica is facing a gap of billions. The big question is how that gap will be filled. There are IMF tools that Jamaica could use without long reviews and without going into a long-term program. These are quick access tools for countries hit by major disasters. One such tool is called the Rapid Financing Instrument. It gives emergency help when a country faces a shock that causes sudden financial pressure. It is not a full program and does not include the long list of rules and steps that come with normal IMF programs. The size of this support is based on a country's quota. Jamaica could only access a portion of that amount. It would help with short-term balance needs, but it would not rebuild the island. It is only a bridge. Jamaica would still need billions more from lenders, grants, or multilateral institutions. This is why the IMF conversation is not about whether Jamaica is in trouble today, but whether Jamaica will have the money needed for full rebuilding. The central bank is holding interest rates steady. They are trying to protect the currency. They are trying to keep prices stable. But the cost of rebuilding is far more than what early insurance payouts can cover. This is where long-term financing comes in. The country will need help either from the IMF, the World Bank, the IDB, or from the global community. There is also the question of what type of loan Jamaica will take. If the country goes into a long-term IMF program, there are usually conditions. These conditions often involve reducing spending, keeping debt low, and meeting certain macro targets. After a disaster this large, these conditions can be hard to meet without hitting public services. That is why some people are worried. Jamaica spent years working to lower its debt. The country worked for stability. Many citizens remember the older IMF years. Some fear returning to a heavy IMF program, even if the situation is different now. But it is also important to understand that there is no sign Jamaica wants to enter a new IMF program with strict long-term conditions. If Jamaica goes to the IMF, it may only be for short-term support. There are tools that are made for disasters, and these do not require the same long reform plans as past loans. It is possible that Jamaica could access one of these without negotiation pressure. It is also possible that Jamaica could avoid the IMF altogether if it secures enough help from the World Bank, the IDB, and other partners. What we know for sure is that Jamaica will need more money. The biggest question is where it will come from. If the country borrows from traditional lenders, the debt will rise. If the country does not borrow, rebuilding could slow and affect the economy for years. Tourism is already impacted. Homes are destroyed, roads and bridges need repair. Agriculture has taken a major hit. Many small businesses have lost everything. This means the economy is at risk of slowing if rebuilding money does not come fast. And when the economy slows, government revenue slows too. This makes it even harder to rebuild without borrowing. And there is also another point that must be clear. Even though Jamaica has large damages, the IMF says Jamaica still has buffers. That means Jamaica is not in crisis today. Jamaica is not facing immediate collapse or panic. The country is stable, but stability in the short term doesn't fix the long-term cost of rebuilding. Stability only buys time. This is why many analysts think the conversation about the IMF will come up again in the coming weeks or months. Even if the government does not want a long-term program, the gap is too big to ignore. The country needs billions. The early payouts helped with the biggest emergency needs, but the rest will have to come from loans, grants, or partners. From a simple point of view, the script can explain it like this. Jamaica planned ahead, Jamaica got quick support. But the storm was too big. The damage bill is too large for the country to manage alone. The IMF is not confirmed. The IMF is only a possible option. The country may go for short-term tools. The country may go for other lenders. But either way, the gap has to be closed. In the coming months, Jamaica will outline its full rebuilding plan. That is when the borrowing numbers will become clear. This is also when the public will know whether the IMF will be used or not. The government will likely mix funds from many places. Insurance payouts will take care of early response. Loans will take care of rebuilding. Grants, if they come, will help soften the pressure. Partners like the World Bank and the IDB will likely play a large role. People should understand that borrowing after a major disaster is normal. Many countries do it. What matters is how the loans are structured, how the repayments are managed, and how fast the country can rebuild. A large part of the success will depend on how quickly tourism returns, how fast small businesses restart, and how well the government manages spending. Jamaica also has to make sure the debt levels do not rise too quickly. The country spent many years reducing its debt. A single disaster should not undo that work.